Let's shift gears then and focus in on the entire retail space, talk about the festive frenzy, the outlook on margins when it comes to Go Fashion. And joining in right now, we have with us Gautam Saraogi, who is the ED and CEO at Go Fashion. Good to have you on board. Thanks so much for taking time out, Gautam. The last two festive seasons have been awfully subdued, largely on account of the pandemic. But looks like things are returning to normalcy, and how? So, what's the demand situation? How are your same store sales growth shaping up?
So see, the demand in the festive season. Look, look, we all retailers are quite bullish that this festive is going to be a bumper festive for all retailers across the country. And because it's the first time in 2 years we've had 2 or 3 full quarters without the impact of COVID. So I think that should be a positive impact on sales during this October, November, December festive quarter. As far as same store sales growth is concerned, I think we will be looking at double digit same store sales growth compared to pre-COVID levels. Because since we all are still recovering from the COVID impact, so hopefully in this festive quarter we should be having double digit same store sales growth compared to pre-COVID.
Is there any difference in terms of demand from the tier one cities vis-a-vis the tier two and three, and what are the trends that you're observing?
See, for us, our experience in at Go Colors has been very consistent as far as tier one and tier three is concerned, because most of our product pricing is well under 1,000, and because of our very right pricing strategy in our products, we've seen that tier three and tier four also has done very well for us. So, from a demand perspective, for us, there hasn't been too much of disparity between tier one and tier three. We've seen strong demand across all cities.
In the last 1 month, cotton prices have corrected by around 19%. Additionally, the availability of cotton is expected to improve from October onwards. And consequently, the question, of course, is then, can there be an improvement in margins for you?
See, we've seen that the raw material pricing has been consistent in the last few months. From a margins perspective, we see improvement in the margins because of our EBO sales increasing. So, because our EBO mix has EBO channels in general have better gross margins, and as the EBO sales in the for the future quarters improve, our gross margins of the company and EBITDA margins of the company will also further improve. So, it's going to be more driven by the channel mix rather than the raw material pricing.
Okay, so you have an addressable market for branded market, that is, of about 4,000 crore rupees currently, and you expect it to be about 11,000 crores by 2025. So fair to say that this will translate into around and 3 times growth for the company as well on a balance sheet basis?
See, from a company's perspective, we are looking to, because our base is large, we've grown as a company as well. We are looking to grow at a CAGR of more than 20% in the long-term future. Obviously, since right now the percentages would be larger, but on a long-term CAGR perspective, we look to grow at more than 20% every year.
So the company is the strategy to stay focused on what is called as the bottom wear category. Do you have any plans to enter into other segments and other categories as well?
See, very rightly you mentioned about how big the women's bottom wear market is. It will become 11,000 crores by 2025. So we as a company see that the opportunity in the current space itself is very large. So we as a company want to have our entire focus on women's bottom wear, and we don't want to really digress into other categories. So currently in the short term and long term future, we're looking to stay focused on women's bottom wear.
That your store addition target is about 100 to 130 stores per year. This is in line with your growth strategy of expanding footprints in new geography. What format of stores are you targeting?
See, we are the expansion. What we're planning to do is about 120 to 130 of our own stores, which are we otherwise call as EBOs. EBOs currently generate about 72% of our overall sales, which we are obviously looking to increase the contribution. So these are going to be fundamentally EBOs of 400 to 500 square feet each store. And we are looking to open across Pan India. We follow a cluster-based expansion model. So obviously our focus is also going to be largely more in the tier 1 and tier 2 cities to begin with, which later, and then we will go to tier 3 and tier 4. So it's going to be a pan-India expansion of the EBO model, about 400 to 500 square feet.
Okay, and on one hand, the tier one cities have higher revenues, but that's offset by the higher rentals. And on the other, the tier two and three cities have lower rentals and other expenses. So, given this, what would be the strategy in terms of store additions? Where is it going to be more profitable?
See, for us, frankly, between tier three and tier one, there is no big difference in our margins because very rightly you said the expenses are much lower in tier three and tier four, but even the revenues are lower compared to tier one. So when I take the absolute percentage of margins on revenue, tier three and tier one deliver the same margins for us from that perspective.
What about your geographical expansion? Because a significant portion of revenues are sourced from South India. Would you look to expand your presence to other parts of the country as well?
Yeah, I see. Currently, our stores are like majority of our stores are in South and West, and we are adding stores consistently in East India and North India as well. Uh, we currently see the opportunity in South and West also is very huge. So even though we are expanding in North and East, South and West continue to be a very strong area of our focus. So in the coming years, as we become our network grows deeper and deeper, the mix does not really change. We see South and West continuing to be dominant because of the opportunity, but North and East as an absolute number also will grow multifolds.
All right. We appreciate your time. Thank you so much for joining in, giving us a flavor as to how things are shaping up in terms of the overall demand as well as outlook on your geographical expansion. That's the word coming in from Go Fashion.